Okay, everybody, Steve Little here. I am excited to be sharing with you this morning one of the very, very key fundamentals of our business, and that is how to get the confidential information, what we sometimes call the simplified needs analysis, or sometimes you'll hear us refer to it as the dime, and I'm going to explain every bit of that this morning. But I want to tell you this: if you will learn the part that I'm going to go over with you right now, you will always be able to do a great job for the client, and you'll always make plenty of money. Got to grab something here. Okay, this is being recorded, but I want to highly encourage every one of you to take notes. Text me if you've got a question. And I want to emphasize this is a training, not an opportunity presentation. So let's just jump right into the middle of everything here. One of the things that's going to happen with this information that you learned today, you're going to be able to make larger sales. And the reason you're going to make larger sales is because you are meeting the client's needs. It's not tricks, it's not gimmicks, it's not anything that is bad for anybody. It's actually, truthfully, what's right for everybody. And I want to highly, highly encourage you to focus for the next 30 minutes. I heard said one time by a guy that had made a lot of money. He said, getting rich is going to be the most difficult thing you ever do. And so I want to encourage you to close your office door. If you're playing games on your phone while we're doing this, stop it. If you are in Facebook, please get out. I want to ask you, lock in, focus with me for the next 30 minutes or so, and I promise you, I promise you that if you'll capture the content of what I'm trying to share with you today, it will make you a lot of money and serve your clients well. As I said earlier, it starts by doing the right job for the client. And what we're going to do there is we're going to find the true need that they've really got, and then we're going to show them how to fund it. And that's always an exciting thing, okay? So I start every presentation off with this slide right here. Once I get past the title slide, I share this right here, and that is, there's some scary retirement statistics out there. And, and you guys have heard me do this. I always summarize it by saying, if you look at these statistics, what this basically means is you line up 100 people at age 25. By the time they get to 65, Aubrey, as you know, that only 4 of them have an income of $45,000 a year or more. Said another way, 96 out of 100 are going to be dead or dead broke when they get to age 65. I look over that client, that prospective client, or the potential recruit, and I say, look, we've got 2 ways to get you in that top 4%. And that is my job, by the way, to get you in that top 4%. We got 2 ways to do it. One is through the products we offer, and 2 is the business opportunity we have. I'm going to plant a seed for recruiting right then and there, but I'm also planting a seed for the sale. So whether I came into the recruiting door or the opportunity door, I'm planting the seed for the other. Does that make sense? Okay. Then, and I want to tell you this, it comes down to a tremendous belief in the product and the concept. See, life insurance does not insure life. If you go get a car and you get automobile insurance, what is it insuring? It insures the replacement of the car if something happens, correct? Life insurance, it can't replace life. It more technically should be called death insurance, but nobody would buy it. And so when we call it life insurance, what is that really doing? Life insurance replaces that money-making machine, also known as mom or dad. If you have a job and if you're a parent, okay, you are, outside of what I know as a wonderful parent, a loving spouse to your spouse, and all those things that go along with being a mom or dad. In addition to that, just pure, cold, hard financial reality, you are a money-making machine for that family. And see, we insure, that's what we do. We insure the most important asset you've got, and it's your income. Live, die, or get sick. That's what we take care of. And if you take a lot of pride in that, and you really understand that, I promise you it'll make you more sales. I grew up and I saw my good buddy Jimmy McDaniel on this webinar, and I know he knows this story, but my dad, many times through the years, I heard him say when I was a kid, I would go with only 2 meals on the table before I would go without life insurance. Okay. And so that's kind of the environment I grew up in. And so I've never had a problem with the tremendous belief that comes along with this concept. And by the way, the more conviction you have as it relates to that, the more you will be able to sell our product and services. So now, when it comes down to computing what it is we really need, there's something called the dime. And I'm gonna back up. I'm gonna get out of this presentation 1 second, and I'm going to pull up this presentation. And I want to point you guys, this is the presentation we use out in the field, okay? And again, this is a kind of a workshop environment. We've all seen this slide right here. We talk about the Tale of Two Brothers. We talk about boom, boom, boom. We talk about, you know, results after 30 years, brother A, brother B. And then we talk about our market. How many people do you know who want to retire with dignity? And the answer to that is everyone. Okay, now here's what I do when I'm in the field, okay? What I do when I'm in the field is I say, the way we provide this for people, you know, we go out and do a simple needs analysis for them. We find out the real amount of insurance they really need. It's amazing, Jeff, it's amazing, Susie. People really have got no idea what they really need. Then what we do, we show them how to fund it, okay? And we find money for them to create that brother B type product for them. We find it in areas where they didn't even know some of that money really existed. And then I ask them these 3 questions, okay? And depending on how they answer question number 3, if they say yes to that, I oftentimes go on into a little recruiting information and show them the income. Or if they say no, I say, wonderful, I understand that, but now let me ask you a question. If we do a good job for you, would you refer, to 6, 8, 10 of your friends? Our services, I've got a recruit with me, our services, or Jim's services here, to those people. They always say yes. Okay, now I want to emphasize something here. Sometimes people feel a little awkward at asking these questions to their friend, okay? The reason I did what I did, I set this up to take the awkwardness out of it, okay? Remember this in sales. If you continue to get an objection, you're doing something wrong. Answer the objection before it comes up, okay? So I noticed, we go out and recruit a lot of part-time people. And sometimes they don't feel comfortable asking some of these questions. Or I've been in an environment before where the training rep was the son or the daughter of the client. Or maybe it was the best friend. And so sometimes I just felt like I need to kind of get permission to ask these questions, if you will. Not always. I want you to think about this. You go to the doctor has no problem whatsoever saying to you, okay, I need you to take your clothes off, roll over on your stomach and get up on your knees, okay? They've got no problem with that whatsoever. And you know what? You don't ask why, you just do it, right? So in this situation, you might say something like, remember I set this up a minute ago, people, they don't even know how much coverage they need. And so I say, so when I get down to here, get done asking that question, I say, Jeff, that's fantastic. Would you like us to show you, do one of these free simple needs analysis for you? I think you'll find it fascinating and maybe for the first time ever, know exactly what your real needs are. They always say, yes, please do, okay? And so then, again, if it feels a little awkward at all, and gang, time you've done this a dozen times, it never feels awkward, okay? But I might say, okay, I've got to ask some confidential information. Fair enough. I say I got to ask some confidential information, or I've got to ask you some financial questions in order to get accurate information. fair enough, and they always say fair enough, okay? Now, in a moment, you're going to see I've got a nice, neat little form that does this really sweet, but there may come a time where you don't have the form with you, and I don't want you to feel like you have to have that form. I have done dozens and dozens, probably through the years, hundreds of these on a legal pad, and it's DIME. The D stands for, so what I do, I just tell a guy, look, it's very, very simple. In fact, lots of times I'll preface it like this. I say, you know, Jim, I've seen all kinds of needs analysis through the years, and it's amazing. I can take all kinds of information and bring you back a computer run a 1/4 inch thick, and the reality is it's going to come up with pretty much the same information I can have for you here in about 5 minutes. And it comes through a simple little formula we call DIME, and I'll put DIME, D-I-M-E, down the left side of my legal pad like you see right there, and then I'll say and I'll go into it. But what we've got very nicely, neatly laid out here is a simple needs analysis form. And what we do, I've got this broken down today into 2 halves for you. And so what we're going to do, we're going to walk through this. And I'm going to just go through this like you would with any client. And I want to emphasize something to you here. If you do this part right, the sale is made. Okay? If you do this part right, you're basically closing the sale right here. So we're going to start real quick. We've got Jeff and we've got Susie. I pulled some random birthdays out of the sky, and this is a complete hypothetical scenario, of course. These two, this couple, they have got, they're both in their mid to late 30s. I think Jeff, according to that little birthday right there, will be 38, going to be 39 on his next birthday. And hypothetically, Jeff makes about $80,000 a year, and we're going to say Susie is a school teacher and makes about 45 or 50. Now, I asked them both, do you use tobacco? And they say no. And I say, Jeff, we need to get some high-level underwriting information so we can target best where your underwriting class might be. So what is your height and your weight, okay? And we go through that. You notice I'm getting information on both of them. Do you have any major medical issues? No, no. Again, the reason why I'm asking these questions right here is because I need to know when I make some projections, do I think they're a standard issue or a preferred issue? We've got 2 major coverers, insurance companies, let me say it like that, and they've got underwriting issues, and you can flat see at 6 foot 205 or 5'5", 130. Are they preferred, a standard plus or preferred plus? It's very clear, but that's why I want and need that information right there. Also, a side note, I am going to ask them how much money they make. I said, just give me a ballpark, okay? And I'll write this off to the side. Just give me a ballpark, just round it maybe to the nearest 5 grand. What you expect to make in the next 12 months. Or how much you made last year. You can do it like that. I'm also going to want to know how many kids you have. Now, we may already know that, but I want to know how many kids and how old the youngest is. In this situation, they've got 2 kids, and the youngest one is 4 years old. That comes into play here in just a second, okay? So now we come down here to the DIME information. Now, you'll notice on the left here, they have changed up the order and the final expenses. You remember on the D, I had debt and death. That's final expenses is the death part of that. So let's just go right into debt. Now, here's what happens on debt. I'm going to help him out a little bit. I'm going to say now, Jeff, this is any car loans, student loans, personal loans, credit cards, anything like that. And in this example, he said, well, my car is about 19 grand. Her car is 21.3. We've got student loans of 15,000. Oh, about 18.5 on credit cards total. Now, I want to emphasize something here, gang. I do not want them to pull out the statement and get it down to the dollar. I want high level. In fact, I tell them sometimes, look, just round up to the nearest 5 or 10,000. Always round it up. And so In this case right here, if you total up exactly what those numbers were, it's 73,800. So I'm going to round that up, and Jeff tells me 75,000, and I'm going to say now, Susie, if something happened to Jeff, you want those debts paid off, right? She says, of course. And I said, and Jeff, if something happened to Susie, likewise, you'd want those paid off, right? Right. And let me just point out right here that we always take these numbers not on something they're going to be doing next year, not on something where they were a year ago, but we take these numbers as if they died. We're going to die the day after we got this issued, okay? We take a present snapshot, and that's what we're going to protect and aim for. If things change down the road, things can change down the road. But for right now, we take this as of today's scenario. Now, final expenses, this little form says recommend 15,000. That's kind of a minimum. In our part of the world, it's generally 15 to 20,000. And as I have spoken to people, can go as high as 25 if you don't watch it. And so what I'm going to say here is something like this. Jeff, final expenses, we're talking burial fees. If you want to keep it light, don't say burial fees, just say final expenses are recommended to be about 15,000. When I say, Jeff, in our area, final expenses, it's about 15 to 20,000, 25 if you go elaborate. You can have an open bar for 30, you know, and they kind of laugh. But I say 15 to 25 is about average in our part of the world. And usually right there, they'll tell me, give me $20,000. Every now and then they say something like, well, I'm not going to be buried. All I need is a pine box and an oak tree. Or somebody might say, well, and if they say that, I'm going to laugh and say, well, Jeff, Susie might not feel that way about it if something really happened to you. Or they might say, I'm going to be cremated. And if I say, okay, how much? I said, are you serious? And they say, yes. How much do you want to set aside for that? And if they don't know, I'll put in $5,000, okay? And by the way, it can usually be done for less. But then the mortgage, okay? I'm going to say, Susie, if something happened to Jeff, I'm assuming you'd want your house paid for. Is that correct? And they say, yes. I say, ballpark, what would that take to pay that off? And they tell me $230,000. And I'll throw that over there for her, for in the event of her death too. Now you'll notice this column here is if Jeff passes away, what Susie would need, and the reverse is true over here. Now the education, you know, Jeff, our company recommends $100,000 per child. Everybody feels a little differently about this one. Some people say, you know, my kid can go to community college and it's right down the street and they can live at home. Someone else, I had one just a couple weeks ago, said, you know, I've got two really smart kids and they're planning on med school, so we better double that per child. And usually they will default to our recommended number, and they say we've got two kids, let's do 200,000 each, okay? And this one here is where there's usually a difference of income replacement if they don't make the same amount of money. And by the way, this right here is usually where I ask them what they make, okay? Because it's very comfortable right here, okay? So I'll say, now, Jeff, if something happened to you, and I'll ask them, which one of you usually pays the bills? And you probably know already by now, okay? Because when you start asking about debts and things like that, one of the spouses usually looks at the other one, and one of them is usually much more tuned in than the other. But I'll say, Jeff, if something happened to you, how much would Susie need on a monthly basis to get by? And they look at each other and they start thinking, and I say, well, Jeff, how much do you make? He says, well, I make just a little bit over 80,000. And I say, round numbers, that's about 7,000 a month. And Susie says, well, I'd need 7,000 a month. And then I laugh or I don't laugh. I say, how long would you need that? And she says, well, probably till I'm 95, because that's how long my mom lived, or my grandma lived. And now, if they were dead set on that number, I'd take 7,000 times 12, multiply it out, and that would be millions of dollars, okay? And so my job here is to educate them, okay? I'm I'm going to say something like, okay, now Jeff's making $7,000 a month, but the truth is, if all the debts were paid and the burial fees were taken care of and the mortgage was paid and college education was handled, you probably wouldn't need all that, right? And she says, oh, yeah, that's probably right. I said, also, and I think of this, they tell us that the breadwinner usually consumes about 25% of their earnings through, the automobile, food, clothing, dry cleaning, just the things associated with creating that check. And so I say, now, if you think about this, how much would you need? She says, well, 5,000 a month. I said, okay, 5,000 a month. I said, I usually say, could you get by on less? And now let me tell you what I'm doing. I'm talking them down because this usually is always a fairly large number. I say, could you get by on less? And she says, yeah, I could probably make it on $4,500 a month, and I need that till I'm 95. So, well, now let me ask you another question, Susie. You work, right? Right. I'm a teacher. Okay. You plan on continuing to teach? Yes, I do. Okay. If you had your youngest child is 4, if you had an income replacement till your youngest child was age 18, and the mortgage was paid, the bills were paid, and you handled your money right, could you get by on, let's say, at $4,500 a month for 14 years? And they look at each other and they, well, yeah, yeah, that would work. And I've done the math already. That's $756,000. And then we go over here. I say, Jeff, let's say something happened to Susie. How much would you need? And he says, I wouldn't need anything. I can make it. I said, well, now, hang on a second. Susie's off in the summer, right? Right. You got a 4-year-old child, right? Right. Aren't you going to need, I mean, in your job, do you have to be gone sometimes? Yeah. Or do you have to show up, from 8 to 5 every day? Do you have to, yeah. Well, is it possible you might need some domestic help or someone to help take care of the kids during the summer until they're old enough? And he says, yeah, and that's probably true. And so I said, what if we did, I said, would $1,000 a month make it work for you? And let's say your youngest child, when they're 12 years old, maybe the kids are old enough to help around the house and make everything work then without additional support. He says, yeah, that probably is a good plan until the youngest is 12 and $1,000 a month. And so that comes up, if you do the math, 96,000. Again, I typically will round that, and so that's $100,000. And I say, Jeff, the real number of insurance you need based on your numbers is $1,281,000, and Susie, we need $625,000 on you. And so, Jeff, why don't we just call that 1.3 million? Fair enough. Yeah. And I said, on Susie, you want to call that 625? You want to round it to 650, and whatever he says there. So I hope that's clear on that part. Again, what I'm trying to do is get real numbers. Let me tell you something, folks. Oftentimes, they don't have enough money in the budget to do everything they want to do, as far as retire like they want to retire and cover every single need. That's why I talk them down. These are now real numbers. If we get down to time to close the sale, I come back to this page right here, and they say, no, we can't do that. I say, okay, well now, if something happens to you, which part are we going to eliminate? I said, is that college education for the kids really important to you? Or can we cross that off? And I take my pen and put it right beside the 200,000. If they say cross it off, boom, I cross it off. I say, okay, no college education for the kids. I say, sometimes I use the phrase very tactfully. I say, Jeff, I know you don't want your wife to have to marry for a meal ticket to get your kids raised if something happens to you. I mean, we got to provide for it, right? And I use that very rarely, but I have used it. Usually, we're able to meet their needs based upon the budget. But again, the reason I don't want highfalutin numbers here that don't make sense to them is because those are real numbers. This number I've got right down here, that's 756,000. I want you to remember, her husband's knocking down about $7,000 a month. This now is only $4,500 a month, and only for 14 years. One of our top up-and-coming leaders on the team, Regina Thompson. She's got a heart-wrenching story, and she is a widow. Her husband passed away just 4 or 5 years ago. He was a stud athlete training for a triathlon, and he passed away in a lake while training. And she told our leadership team a while back, she says, I want to tell you something. I was well provided for. I had a husband that took care of me, but the expenses are far greater than you realize. There's always something else coming up. There's always a new expense you didn't allow for. And sometimes I've seen a spouse say, I don't need anything. I say, well, no, wait a second. Those kids are going to grow. They're going to need new clothes. There's going to be summer camps and ball camps. And they're going to want to do cheerleading and football and sports. And there's all kinds of stuff we haven't allowed for, like, you know, a second car when they get to age 16 or anything like that. We haven't allowed for a lot of things. And so this is, so again, if you do this piece of it right, the sale is made. So we got 1.28 million, 1.3 million on him, 625,000 on hers, what the need is. Now, here's what we're going to do. There's our form. So you can see now we've got the top half of it filled out. Now we go to the bottom half of it, and this goes a little bit quicker. And I'm going to say, okay, now let's find out where to fund, what we've got access to fund all that. On our retirement, you have any stocks, bonds, mutual funds you contribute to on a monthly basis, and that are not qualified funds. In this example, no. Current life insurance premiums, and he says, yes, I've got a whole life policy I bought way back when. I've had forever. It's about $100 a month. And we got a policy on Susie that's $50 a month. I said, great, can you get your hands on those policies? I am going to pick the policies up. I'm going to take them with me. And the reason is we want to analyze them, okay? We want to, and you will be an expert at looking at these policies later. Let me tell you something, gang, right now. Unless the guy or gal is uninsurable compared to when they bought the policies, I intend to replace every policy we pick up. Now, sometimes, is there ever a situation where it makes sense for them to keep what they've got? Yes, sometimes the way the numbers work out, but they're rare. We can almost every time improve their situation, okay? So you pick the policies up and and you just act like a standard operating procedure, okay? Just like if the doctor, one more time, he said, look, go get this prescription, it'll take care of you. You pretty much, you go do it, okay? Again, you say, okay, we'll take these with us, we'll bring them back when we come back, okay? Because you're going to do an analysis with all these numbers and come back with a plan. The current IRAs, Roth IRAs, 401ks, 403bs, etc. In our example, this guy's got, he says, I got $200 a paycheck going into my 401k. And I said, great. I said, how often you get paid? He said, twice a month. And again, I'm going to say, is that 24 times a year or 26 times a year? Obviously, there's a difference. But he says 24. I get paid on the 1st and 15th. And so he's got $400 a month going into his 401k. And then she says, I got $200 going into a 403b. And I asked him right here. I say, now, Jeff, let me ask you a question. We talked a while ago about those dollars, right, that are in tax prison and how the taxes are due. Let me ask you a question. On those future dollars that are being contributed, are these dollars you'd like to have that are outside of the government's control, and it's dollars that you can control where they're not taxable down the road like existing contributions are? And they always say yes, okay? And then I say, now, in addition to everything else, okay, you're paying these dollars up here for your insurance, and you got these going into qualified funds that we've got access to use to strategically design a program like we were talking about a while ago for you. Are there any additional monies that you could contribute for your retirement? Now, if you don't ask this question, you're never going to get the right answer, okay? I've had people say anywhere from, no, there's nothing else in the budget, to not too long ago, I had a guy say, yeah, I can give you an extra $2,000 a month in addition to this other stuff we've been talking about. So be sure you ask the question. So additional monthly premium for your retirement, they say, we can do an extra $100 a month. And obviously that 100, I'm not segregating these funds, him and her, I'm just identifying where they're coming from. And so when you look at that, he's got 600 a month going out there, counting the 100 that we've got access to. and then 250. Every now and then, if somebody tells me no here, there's no extra money, and they don't have hardly anything going on up here, I might say, you know, there's a reason that 96% of the people end up broke at retirement. And my job is to get you out of that 96% group and get you into that 4%. I said, you got to give me something to work with, okay? Average across the country is $75 a week with our company. 75 a week times 4 is obviously about 300 a month. That's average, okay? If you've got nothing in these numbers right here, okay, this is where you have a reality conversation, okay? Oh, there's one other number that I've got to get added to this form. It's not on here, and it's the tax refund, okay? The tax refund is a very important piece of this. And I asked the guy, do you typically get a tax refund? And he says, yeah. In this example, we're going to say $2,000 a year. I said, no, do you know why you get that $2,000 every year? And they usually think about it, and ultimately, you guide them if they don't get it. But ultimately, it's because, well, I overpaid my taxes. Yeah. And how are you overpaying that? Well, I guess it's in my paycheck. Yeah. Every time they take a paycheck, you're overpaying your taxes. And $2,000 a month, excuse me, a year, $2,000 a year, Jeff, Susie, that's about $170 a month. Now, Jeff, how do you feel about giving Uncle Sam that loan? I mean, and I asked him before I say that, I say, what kind of interest rate do they give you on it? And again, they look at each other, and ultimately the answer is 0. Sometimes they get it right off the bat. Sometimes I got to help them. But so how do you feel about giving Uncle Sam $170 a month, interest-free, every month of your life? Oh, I don't like that. Would you like to get those dollars and redirect them? And they always say, yes. Now, let me show you something right here. That 400 right there and that 200 right there, those are currently tax write-offs, okay? So if I take that 600 and move it from a before tax into an after tax situation, there is going to be, that is going to create a taxable event for them. And in that case, it's to be about 25% of that in their tax bracket. That'd be about $150 a month of tax liability. So in that case, the tax refund offsets the taxable situation there. Now, something else, in case you're not familiar with it, how do you get, okay, I found somebody the other day who was getting a $5,000 tax refund. And I said, what do you do with that money? And they look at each other, and I said, I can tell you. Sometimes I volunteer that. They say, okay. I said, everybody does one of about 3 or 4 things. They take vacations, they pay off bills, or they go on a shopping spree. Okay? I said, did I get it? And they laughed. Yeah, you got it. We always take a vacation. I said, okay, now, what's more important to you? Because $500 a month, or excuse me, $5,000 a year, they said they got between $5,000 and $6,000 a year as a tax refund every single year. And that money right there, you know, that's $400 to $500 per month. And I said, would you like to take those dollars and redirect them to where they will help secure your retirement and create a tax-free income for you? And you know what they say every time? Absolutely. Absolutely. Okay, let's keep going. Now, in this case, the guy's got qualified funds. He's got a 401k from a former employer of $61,000. She's got a 403b with her current school system of $10,000. And let me make a note here. A former employer, those dollars can be redirected. A current employer, they cannot. Okay? So that's just, I don't win all that right here. I just am gathering information. Okay? Non-retirement funds, he said he's got a money market that he earmarked as kind of a retirement, an emergency fund of $10,000. Okay? And then she's got, in this situation, she's got $3,000 down at the credit union. She has $25 held out of every check, puts it in the credit union. It's grown now to $3,000. Okay? College funds, they've got 0 and 0. And then their cash value balances in their life insurance policy. He's got that whole life policy from way back when. It's up to $2,500 now, and she's got zero. So the total funds that they've got accumulated there are 73,000. So what I've got to work with, there's 600 there, there's 250 a month there. That's a combined 850 a month, plus that 61,000 is very, very strategic. So what I'm going to do is I'm going to pick up these policies, okay, and we're going to gather the information. We're going to invite the guy to a business opportunity presentation if it's applicable, if he said he was interested in getting more information, and we're going to reconnect soon. I really prefer to set the next appointment at this time right here, okay? And by the way, when I set that sale cannot be done in 30 minutes. Sometimes they act like, okay, let's catch it between halftime. Let's do it at halftime at the ball game. No, 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 no. We need privacy. We need quiet. We need both of you, husband and wife. Do not present this without both of them there. I don't care how much the guy says. I make all the decisions. He doesn't. Okay. And sometimes I get the reverse of that. I make all the decisions. I'm gonna tell you something. They get paying $500, $700, $800 a month for a program. And if the secondary spouse, and when I say secondary, oftentimes there is one that makes most of the financial decisions. But if they're not both listening, if they're not both getting their questions answered and getting a peace in their mind about this, somewhere down the road, very quickly, it becomes a problem. Now, I want to emphasize something. Before we arrived, what retirement track were they on? I can tell you right now, they were a 96%er. They were not going to end up in the 4%. With what they were doing, they were not going to end up in the top 4%, right? It just wasn't going to happen. This guy is 38 years old. He's got, think about this. If he started working in his young 20s, he's got, about 40% of his working life behind him. And he's got, 10 grand saved in a money market fund. This guy is destined to be a 96%er. You need to understand that. We're going to take his existing dollars, rework the puzzle, if you will, redirect it, and the attitude I've got within me, I'm not here to enhance your retirement a little bit. I'm here to save it. And I might even say those words. But if you don't believe that, if you don't have conviction on that, and if you're not passionate about that, you're going to be a dadgum half-butted dud out there in the marketplace. When you try to, you're never going to make a sale. Okay? You've got to have belief, conviction, some passion. That's why I like that new book, The New Rules of Retirement Savings. When I get that, I used to ask a guy to read the prologue in chapter 1. Now I ask him to read chapter 8 and chapter 9. It's 11 pages. He said, you probably don't want to read the whole book, but if you'll just read chapters 8 and chapter 9 before I get back here, it's 11 pages. It's a 10 to 15 minute read. And that right there, it goes right to the heart of what we do. Okay, so now, here's what I want to show you. I'm going to come back on that 61,000. Okay? Now, the reason I put 61,000 in there is we had a real training sale we did just a few days back, about a week ago. The guy was 40. His name was not Jeff, but 61,000 was what he had in a 401k. And this is exactly what I presented to him, except the bottom has been changed for my hypothetical over here for our new guy, Jeff. So, and I said, this guy, and I'm going to use the name Jeff for him, but I said, Jeff, there's potentially a smart option for that 61,000 you've got in a 401k. I said, you do realize those funds are in tax prison, right? And I've got the bottom of this page covered up where he can't see the rest of it. That's all he can see, those first two lines. I said, you do realize those funds are in tax prison, right? He said, yeah, I get it. I'm going to pay the taxes no matter what, right? I said, right. You're going to pay the taxes now, or you're going to pay the taxes later. I said, the challenge is later, we don't know what the tax rates are going to be, right? Right. I mean, there may be somebody that gets in office between now and then, probably somebody you and I didn't even vote for, and they may decide that our country is so much in debt that they've got to tax 50% of retirement funds. And the reason they might do that, there's $17 trillion sitting in retirement funds. And he says, yeah, no, I get it. So I said, now let me tell you something. One option for you is you're a young man. If you took the tax hit now, you're going to be taxed as about 25% normal income tax. And you see the asterisk there. This is an assumed tax bracket for him. Now, there is a 10% IRS penalty. So I said, the reality is, to get out of tax prison, it's going to cost you 35%. So if you took $61,000 times 35%, your taxes and penalties are $21,000, round numbers. So that leaves you roughly $40,000 left to use strategically for retirement. I said, does that make sense? He said, yeah, makes sense. And he said, I may have to even pay a higher tax bracket than that later when I choose to retire, right? I said, could be. We don't know, but could be. So now if you did this, you could use that $40,000 on a 5-page strategy with an index universal life policy. Now, the 5-pay is a strategy. You can't put it all in at once. There's reasons behind it, and I'm not going to go into that right now. But you could use that on a 5-pay strategy. So if you took $40,000 up front, you divide that by 60 payments, that would be $667 per month. If you'll give me a $1 a day, we can round that to $700 a month. Fair enough? He said, yeah, absolutely. Now, this is where I've changed the numbers to go with our new guy, Jeff and Susie here. I said, if you put that with $850 that's already available to us, that would be $1,550 a month for 5 years, $850 a month thereafter. And I said, does that make sense to you? He said, yes, totally. Now, this is not a close the sale training class or policy design training class. And so what I'm doing in this example, I'm going to use $100 a month of this money right here. I'm going to use $100 a month of that for term insurance to take care of Susie's need and some of his. The rest of that I'm putting into an IUL, okay? And I just say that because I want you to understand I'm not getting into the exact specifics of the policy design, okay? But I kind of want to tie a bow around this for you. I'm going to take it to the point of sale and let you see why this guy would do this, because we saw all the numbers previously, right? We saw all the dime information. We saw the financial commitment. And I want to put a bow around this thing so you can see the power of it and what happens here, okay? So here's what we do. We've got $17,400 a month going into this thing, excuse me, per year. And again, where did that come from? Well, that came from the $1,450 a month and then the $750 a month, okay? And again, just to refresh your memory, he committed to $1,550 and $850 thereafter, right? That was for 5 years. I want to emphasize something to you. That sounds like a lot of money, maybe, but I want to go back to something real quick. This is important to remember. Where do we get these funds? That's $600 a month. That $100 is already going out in life insurance premiums, right? Right. That $400 is already going out into his 401k every month. And we're going to offset the tax liability from that tax refund, right? Then you come over here, that $50 a month is already going out, right? Right. That $200 a month is already going out. And so of that total $850, all we've added is $100. Then the big chunk that fueled that 5-pay strategy comes from a 401k that he had with the previous employer. So all that funding we're doing, gang, the only thing that's new is $100 a month, which is barely $3 a day. You get the impact of that? I hope you do. Okay, let's go back to where we were. So here's where we are right here. So he's got $17,400 going in every year for 5 years, then it drops to $9,000. Okay, you recall we took $100 a month from those monthly numbers and committed that to term insurance to fill out the rest of their death insurance needs. Okay, Now you'll notice, and I'm going to bring all this together on a little presentation sheet in a second for you, but you'll notice over 31 years, he put in $321,000. That, by the way, got him $936,000 of coverage right now. Again, the difference was made up with term insurance. We easily had the money to provide all that. Now, again, he pays for that for 31 years, and I want to point something out to you. He can start taking $80,000 a year based on 7.52%, and he can take that $80,000 a year for quite a while. In my example, let me go right down here to age 110. We built that out to last till he's 110 years old. That always gets a little bit of a laugh out of him. So when he's 88 years old, though, he would have paid in $321,000 over 31 years. He's already taken out $1.5 million. And his net death benefit at age 88 is $737,000. So here's the way I would present this. And again, I've got this like 16, 18 page illustration. I always say something like, you know, it would take you 2 weeks to go through all these numbers, and there's all kinds of things to understand. But let me show you, there's about 5 or 6 really important numbers on here. And you recall, Jeff, we had 50, and I'm going to pull out his dime form. What I'm going to do, when I go back to make this sale, I'm pulling this form back out. And we're going to go over those needs again. I say, now look, are these, sometimes, Jeff, what happens is we go somewhere, and then we come back, and maybe something has changed. You know, maybe a husband and wife had a chance to discuss it. Are all these numbers still the same? Yeah, they're still the real. All these numbers are still the real. I'm going to reinforce what we were going over, okay? And so he says, yeah, they're all good numbers, okay? So monthly spending, years 1 through 5 was $1,450 a month. Years 6 through 31, that was $750 a month. And this was on the IUL again. So years 1 through 5, that's $17,400. Most of that, of course, is coming from that 401k we're transferring into this. Years 6 through 31, another $9,000. And again, most of that is coming from redirected funds, right? You're adding $3.30 a day from what was already being spent. Isn't that a pretty good deal for $3.30 a day? Yeah. So over 31 years, you've got $321,000 committed. Your death benefit on this policy right now is $936,000. You've got living benefits up to $500,000 that you never had before. That gives you terminal and critical. Again, what I'm doing right now is not a close the sale deal, but I'm going to show you how this wraps up. On retirement at age 70, assuming 7.52%, you've got $80,000 a year annually tax-free. I want to point something out to you. This is the taxable equivalent of today's dollars, you know, assuming a 25% tax bracket, of $107,000 taxable. Now, hey, Jeff, remember I told you my goal was to get you and Susie in that top 4%? Yep. Did we manage to do it? Even with a little cost of living increase, right? $107,000 compared to $45,000. Did we get you there? Yeah, you got me there, Steve. Okay, and then after 4 years, you got $80,000 a year coming out tax-free. After 4 years, you've taken out $323,000. I want to emphasize something to you here. After 31 years, you put in $321,000. After 4 years, you got $323,000. And the exciting thing is, I got this thing set up to give you that kind of money till you're 110 years old. On your 88th birthday, so far, you know, and I just pulled a number out of the air. On your 88th birthday, so far you've lived on $1.5 million, and your death benefit, if you died on your 88th birthday, based on 7.52%, would be $737,000. So, Jeff, isn't that amazing? They said, yes, it is. I said, fantastic. Now, again, I point out to them, did we get you in that top 4%? Yeah, you sure did, Steve. Okay, here's something else that's kind of interesting. On the back of that presentation, in the back of that computer illustration, you'll see this number right here. And that number is actually the commissionable premium. And, you know, we show a number all the time in our recruiting numbers, and we show an average of $3,600 a year. You know, you remember I took $100 for term insurance also in our example? That'd be another 1,200. Throw that 1,200 on top of that, you got 10,700 in commissionable volume. Gang, that's like 3 normal policies. 3, okay, are those average policies. So when you look at this, you say, my gosh, we did a phenomenal job, fantastic job for the client, and we also did a fantastic job for you. How I've made most of my sales, well, I want you to understand something. To me, when I tell the story, it's the FEG story. The story is twofold. The story is opportunity, and the story is product. And if the guy said to me that he was potentially open to the idea, you can obviously imagine, I'm going to go back now, after we got this wrapped up, and say, you saw the power of what we did, right? Right. Would your friends and family be interested in seeing something similar for them so they could get their money out of tax prison, so they could have living benefits, so they've got a chance to really retire in that upper percentile versus with the masses that are going to be, you know, dead or dead broke? And they say, absolutely. I say, great. Well, let's get the paperwork rolling here. Let's get you in, and also let's wrap up this sales process. We can talk more about that opportunity in just a little bit. And so you may have seen me talk about this before, but if I go in the opportunity door, I come out the product door. If I go in the product door, I come out the opportunity door. There will be more sales made by the recruiters and builders in field training than there ever will just a sales person. And so I want to, if anybody's got a question for me at this time, you're going to need to write it, either text it to me or send it in the chat box. I hope that is clear. I hope we helped. And but that right there is exactly what I do in the field. My good buddy Aubrey Richardson, who introed this meeting today, we've been in the field a number of times. I'm sure if we had him mic'd up right now, he could attest that's exactly what we do. So if I don't see any questions come in at the chat box or the text, I hope that was very informative for you. I'm going to wait about another 10 seconds here and see if we get any questions, and we'll let everybody hear the answers to those if we do. I guess, thank you, Bruce. Got a real positive comment there from Bruce. Okay. I guess there's no questions. So what we're going to do, we're going to cut this at this time. I appreciate each and every one of you being here, and best of luck out there in the field. And we're going to absolutely kick tail, take names, as they say. We're going to do a great job for client, and we're going to build a heck of a business, and we're going to have a lot of people make a whole bunch of money in the process. This recording is now officially over. Thank you much.